Welcome back. It is another Rachel Reeves special today where we unpack the autumn budget. Everyone's been waiting for this. There's been a lot of eyes on this budget. A lot of it has been talked about in the previous weeks and run up to it, and also been released quite early as well. So stay tuned. You've got Adam Lawrence, Oliver Adams, Jay Howard, and myself unpacking this budget. Stay tuned for it.
We are fresh off watching the UK budget 2025 and Rachel Reeves releasing a budget that no one was expecting, unless you have the internet and you saw that it was released 40 minutes earlier by the Office of Budget Responsibility. So what happened, why did it happen, and what does it mean? And for that conversation to take place, we have three traders that are completely unaffected by all of this, and we will be welcoming Adam Lawrence here, who will be our in-host, in-room kind of landlord, serial landlord, multiple landlord kind of guy. So just to make sure everybody is aware of what's going on, we have Saif Derzi, volume trader, member of the channel. Oliver Adams, you'll remember from a couple of live streams and some videos that we had done last year, including a panel. Also serial trader, absolute lunatic with a wedge hacker, and he's just ready to go for it. And obviously you have myself, Jay. Now, Adam is still finishing his 2-hour long live stream review of the budget, so he will be joining us when he gets a moment. But before we go any further into that, just what have you guys seen from that budget that makes you think, oh, that doesn't look good? Or, is this positive? Is it eroding public kind of confidence? Like, how do you think Rachel Reeves did?
I think, in summary, it's another raid of the rich to pay for the poor. There was nothing really scary, but it's a slow, gradual erosion of wealth and redistribution of that wealth, in my opinion, to those who can't work, won't work, don't want to work. It's a punishment. There's a lot of little punishments there for people who have been successful in business. They've taken risks and have made investments and worked hard and saved hard. Pretty standard stuff from what I saw.
Yeah, I mean, look, I think a lot of this stuff is not about what we think, is about what the market thinks and how the market reacts. But because it was leaked, and I'll be honest, I didn't watch it live, because usually with a lot of this stuff, you end up getting summaries on WhatsApp groups, you get all sorts of stuff. And I think the time, taken to basically sit and watch it probably would have been used better elsewhere, in my opinion. So I got the summaries, I looked at stuff, and I kind of just looked at the market before 12, I think it was around 12 o'clock when it got leaked. And the 5-year bond rate dropped quite dramatically, which is a good sign. That basically means the market reacted quite positively to it. And the reason is, as with the Labour government, as they've been since the start, they've always been trying to leak information into the market, see how people react to it, and then kind of go and follow on, maybe in a better way. And I think the fact that obviously the OBR have leaked it early is probably just a sign of the whole government and how they are in general. So no, I think it was very much the budget basically was always going to be about increased taxes. It delivered increased taxes. The market thought that's what we expected. That's what we got. Market was positive. If you got a Liz Truss style budget where it went completely opposite to what the market was thinking and they started to cut taxes, I think we would have been an upside down market. So as far as I'm concerned, job done. Now we can basically get this out of the way, hopefully get maybe a bit of a mini boom before Christmas, if not a mini boom into the new year, and away we go. The reality is, markets are markets, and I don't think there's going to be anything fundamental that's going to change as a result of that in the property market. I think it's just business as usual as far as I'm concerned.
I think we've seen maybe the last 6 weeks in terms of auction results. You see a lot of people kind of sitting on their hands. Stock that should have been selling really well just got a bit sticky. And I've been saying to people literally the last 6 weeks, saying, look, nothing's actually changed. It's walking into an unknown. So I kind of agree with you, Saif. I think now that there's a known, it's something that's quantifiable. You can sit there and go, well, that's the impact of that, and that. Business as usual. Let's crack on.
Yeah.
So
Totally.
we're selling in December. Are you guys selling in December? You feeling a little bit more hopeful for the December sales?
Yeah, I've got multiple lots in different auctions. Auction House London, for example. Tried to hold off any lots this week for obvious reason. I've heard from a couple of people that they've had lots in auctions this week and they've not done particularly well, which is no surprise. People are sitting on the hands; they're waiting to see what came out of today. I think for most people in the property market, it is business as usual. There was nothing there really that impacts anyone in any great way. There was no changes, I don't recall, to stamp duty. So it's crack on, forge on.
Yeah, I'm so glad Adam was delayed coming on because we got a good bit of a head start. Now you can take the stage, my friend.
Are you suggesting my usual contractual obligation of 83% of the talking time will be something that I'll append to today?
Well, ladies and gentlemen, we've just gained 3% in terms of 3 minutes. Normally it's 87%. We've got 4% differential. We're doing better than the UK government right now. But I did say Adam Lawrence would be joining us. We have a behemoth of a brain, and I understand you've literally just done a whole live stream around the revelations, the Reeves revelations and reforms. Not calling them increases or hikes. It was all about reform. Adam.
They need to think of a new word, Jake, don't they? They need to think of a new word there. They've got to stop using the reform word. It's not helping them. It's not helping them.
I mean, it is pretty much kind of, signaling to an alternative party.
Just before Adam goes with his commentary on, just before that, just to finalise that point, similar to what Oliver was saying, so it is very much increased taxes is what everyone was expecting. The market got that. The market reacted pretty positively to that so far. From a trading and auction point of view, so many people have been asking me, are you going to stop selling in the budget and in December and going to wait for January, February? Funny enough, I had this conversation with Oliver yesterday. The problem is I can't afford to do that. It would be lovely to say, let's hold off selling everything and wait until January, February. But the reality is we can't do that just because of the sheer volume. And also, I think based on averaging things out, it's actually sometimes you have weeks where you thought, I probably should have put some stock in there. So the best thing we can do as a trader is put stock in every single week where possible, and you catch the good, the bad, and ugly weeks. It's as simple as that.
I'd say more immediately, if you watched the Savills auctions yesterday and the day before, I think considering they were 24, 48 hours before the budget, it looked like they had a fairly decent day. And I saw a couple of traders posting on LinkedIn about having 9 sold and things like that. So they were transacting fairly well. But it's
But Jay, how does the budget affect properties sub 150 to 200k? Not much in reality. The budget really was affecting higher value properties, right?
I don't think it affects property. It affects operators and industry and the laterals around the actual property itself. Landlords are going to be having a little bit of a kicking here with that additional 2 percentage points. There's no way around that. They're going to be hit on property, savings, and dividends, right? If you are a landlord that is in a limited company, you probably are drawing down an income via dividends. So you'll be hit there. The property will be hit. Any savings you make will be hit. We call them hits. She was calling them reforms and contributions, but there is definitely the shackling of coffers of the kind of intangible. The things I thought that were quite interesting is the reforms around gambling, and I thought whilst we have a gambler in our midst, maybe we can get Adam's thoughts on how much of a reform and what the impact of those reforms are on the gambling sector.
Yeah, it's an interesting one, isn't it? Because I think we've probably got more than one gambler in our midst, to be honest, but it's how it manifests itself, Jade, to be fair.
Indeed.
It was always going to be the case, and they've gone after sort of remote gambling. The last sweeping changes in the sector were Gordon Brown inspired in the early days of the internet, apart from anything else, when people realized this money was all going to go offshore. So they've been very keen to make sure they're not hurting in-person horse racing and things like that, which are already really, really struggling, falling turnover all the time, falling attendance numbers. tickets just get more expensive year on year on year, and betting's a mug's game at the end of the day for 99% of people. So there's only so much rope that they've got, and they need to attack those fixed odds bet terminals because they create so much social downside and only really generate profits for a small amount of society, most of which goes offshore anyway. So it's difficult to argue with any of that. What is it going to do to the, Fred Dunn was saying, wasn't he? It's going to decimate the high streets and the betting shops will all close and all the rest of it. I'm not so sure about that side of things, really. Remote tax up from 21% to 40%. Lots of gambling sectors have levies. The Greater London has a levy on casino profits of 50%, for example. That's one of the reasons why the super casino was built not far from my house. Nothing to do with me, I hasten to add, gentlemen, before you start. But the idea was people would be flown into Heathrow or similar airfields on private jets and be limoed up to the Midlands, where they would have a lower tax rate to pay if they lost lots of money, and the casino won it all. So that's one of the reasons why it was outside of the M25, apart from anything else. What will it really change in terms of behaviour? It's going to raise 0.9 billion, they said. There were numbers of up to 3 billion coming out. So they obviously listened to how much damage it might do to the high street and those remaining covenants that's still in there. And their point is in-person gambling is not going to go up in price. We'll see. The only time gambling normally makes news is when Denise Coates declares her salary for the year, the lady who owns the majority of Bet365, who's not leaving the country and pays several £100 million a year in tax, for which I, amongst other people, I'm sure, are very grateful. But it was always coming. Labour in the House of Lords have been on top of the gamblers for years and years and years, Jay, to be honest with you, the thick end of a decade at least.
Hi, Michael Allison here from Roma Finance, proud sponsors of Property Auction Hunters. These guys are great to get you ready to go out there and buy an auction. And Roma Finance, with our product set, we're there ready to support you with the finance that you need.
Well, to keep you battering around from subject to subject, the OBR is predicting that the UK economy will grow by 1.5%, which they've upgraded from 1% earlier on this year on the back of this budget. And inflation is predicted to average at 3.5% this year and potentially falling down to 2.5% next year, getting closer to the government's 2%. What are your kind of feelings on those 2 points? Because those are big points that are going to be real signals to the market in terms of how investable the UK is and how stable the government and the government coffers are.
Yeah, it's a great question. I mean, look, I was one. Now, remember the OBR, that 1% was their revised forecast from March. What they said last time out, before the last budget, was we would get 1.8%, even with that employer's national insurance rise. And people like me cried wolf and said, absolutely no chance in the world. Don't be so stupid. You've just driven a truck through the private sector, which the incidence of the tax difference in the private sector last budget for employers was about 20 billion quid, right? So that was the quantum of it. This time around, it's going to be much less, but it's not nothing because of what she's done on the salary sacrifice side of things, right? Still about 20% of the size of what it was last year. Now, the 1.8% was never going to happen. The 1.5 sounds much more realistic to me. It's a case of carrying on in spite of what the ruling party are doing rather than their supposed growth policies. But if they can get people building, and I didn't hear anything about Help to Buy, but I did hear a huge amount about the house builder shares spiking upwards before the budget. So perhaps that was all speculation. But there's also a load of stuff that doesn't make it into the speech that always makes it into the printed edition when we see all of that. So but I would have thought she would have put Help to Buy in if she was going to talk Help to Buy. Inflation, well, there was a number of one-offs that occurred in the past 12 months. Now, that's not me saying that. This is the government line. The one-off in terms of the employer's national insurance hike, right? The one-off in terms of a 27% increase in water bills. Here's some things that aren't one-offs. Council tax bills going up 4.7% last year. I expect a very similar number this year. Could be something like that. Energy price cap, the jury's out because it hasn't been going down as they wanted. We did talk about the scrapping of the levies to bring the average bill down a couple of £100 a year. That will obviously help. But tax bills left, right, and centre. Has that helped you if you've got an electric car? No, that's inflationary. Your vehicle excise duty might be, you've only just started paying it, remember, in 2025. You weren't paying anything for an electric car. Then you go into £400. Then if you drive 15,000 miles a year, you're going to pay another £450. So that's 100+% increase. Wages are up. Minimum wage is up 4.1, bit more if you're younger. Private sector wages are going to bumble on at sort of 3.5 to 4%. Not a lot of this sounds particularly like a 2-point-something% inflation world to me, Jay. We've got to get back to 3% first. Now, the word is around April that somewhere between 0.5% and 1% will drop out of the figures from April 2025's inflation rate. So if we're at the sort of 3.5, 3.4 level by then, which is possible, right? Then we go down to 2.9. We even might go down to 2.4 very briefly. I'm not sure it's going to be as smooth as all of that because I still think there's plenty of things to go up around April time. And I still think there'll be plenty of companies who've got to try and pass on some of this stuff to their customers and will carry on passing on as much as they ever can, depending on their price elasticity and their margins and things like that. Exciting stuff that I like talking about.
Well, it is exciting stuff, but let's try and bring some relevance to the groups that we kind of represent in terms of property. Like, what do you think is the real impact on the wages, benefits, and pensions on your average landlord, for instance?
Well, obviously, we've not heard anything about local housing allowance going up or being frozen. There's not been any confirmation or denial. I assume that would have made the speech if it was happening. So I assume it's being frozen again because that's going to be the overarching policy. So freezing of LHA is very, very damaging from the tenant perspective. From the landlord perspective, there's an absolute metric ton at the moment, and I'm sure all you guys speak to them on a semi-regular basis, of people who, if they weren't in property, they wouldn't get in today. They'd make a different investment decision. Now, by putting up the rates on savings as much as you do on property income, you don't change anything from a comparative point of view, right? It's 2% for anybody. If you want to, I just laughed about it, if you want to encourage people to invest in UK companies, which is what you're supposed to be doing, and you've lowered the cash ISA limit, then the one thing you probably wouldn't do is increase the dividend tax, because they're then going to pay more dividend tax unless it's in an ISA, of course. But the point of choosing stocks versus choosing cash versus choosing property, they're all going to pay a bit more. So comparatively, that hasn't changed. What does it mean? It means income streams are lower than they otherwise would have been. So it's going to mean different investment decisions. It's going to mean obviously for people who've got expensive houses, it's going to change behaviour around the £2 million mark. Not a lot, but a little bit. And the same around the 5 million mark. But most people know, who aren't stupid, when you increase the tax, when you introduce it, it starts low and then it starts to creep upwards. That's normally the way it works, right? So that probably changed some behaviour on that front. I'm not so sure whether it will be deemed particularly damaging because does that extra 2% break the camel's back? Not really. A little bit of it gets eaten by the tenant because it's probably going to push rents up even more. Section 24 was estimated that within 3 years, 100% of those rises had gone onto rents. A vast majority of anything in property gets passed on to the tenant. It's just the nature of the beast because there's a fixed supply of housing. And as you'll all have noticed, we really aren't building any more at the moment. We weren't building that many anyway, but now we've really slowed down. So we are where we are on the supply front. Maybe we'll make some more void houses because they'll all be worth 2 million quid and 5 million quid because all these people will be leaving the country. I don't know. And there's probably an element there.
So I was talking about landlords and talking about Section 24 and increase in taxes. So this is purely just from a trade point of view. I was sat having lunch today with an auctioneer that deals with receivers, and he's not seen the volume of portfolios put across his desk from a receivership point of view that he's seen in the last probably 2 months and he's seen in the last 5-6 years, which is interesting. So the repos seem to be quite a lot more on the landlords front as opposed to general owner occupiers, where a lot more on landlords recently. Me and Oliver have been involved in a pretty decent sized portfolio. where it was a landlord that got repossessed. I mean, some of it was 50 pence in the pound, so they're having to take a haircut on their debt because a lot of it was it was bought, but it was over leveraged more than anything really. So the leverage was the issue. And then Section 24 just killed all the cash flow got killed. Maybe they took on a few developments here and there. And we were also talking to someone recently in an event, weren't we, Oliver, where again, big landlord from 2001 took on some developments, didn't realize how much his tax had gone up as a result of Section 24 from 30 grand, 75 grand a year, and now basically having to file for administration. So I think the reality is people haven't really seen the repercussions of Section 24 because it was, it was kind of, it was priced in over time, right? 25, 50, 75, 100.
And interest rates are so low as well at the time that it didn't really make a material difference. You're quite right.
Exactly. So it is very much a case of now we're starting to see the impacts of that. So add in the 2%, that's just from sprinkling the cherry on top, really, more than anything. I think these guys have already beaten down where they have. I do agree with you, Adam. 100% people will put it onto the rents, but there's some people that are running some pretty optimized portfolios where they've got nowhere else to go. But they've increased rents year on year where possible, but they're still struggling because the main issue is just the refinance. They've basically just over leveraged their portfolio, sweated every little bit of equity out of it to increase and maybe do some personal spending because obviously it's in your personal name, easy to spend that money, right? And now they've just got nowhere else to go. But they're literally at a point where they have to either get repossessed or have to try and work with the bank to try and sell some of them off and take a haircut on the debt. Simple as that.
But they're kicking the can down the road here as well, right? Because they're putting freezes on, and they're kind of what do you call it, backloaded tax increases, which are quite scary when you think about it, because essentially what it looks like to a certain degree is that they've tried to tax their way into growth. But all they're going to do is reduce savings, reduce spending, everything's going to tighten. That's going to create another inflationary probably a less inflationary market, but it's still not good news for the country, right?
Where's the incentive for anyone here to do more, to work more, work harder, invest more, take more risks? There's no incentive there, is there, for people who are generating money for the exchequer? We all pay taxes. We're all heavily taxed in the property industry. There's nothing there to incentivize us to do any more. If anything, you're just more selective over what jobs and work you take on now, on the basis of, for the return that you would say, the net return after taxation, why would you bother?
Yeah, totally agree with that. And I think if dividend tax goes up, it makes more sense to leave the money inside the company and try and sell the company or wind it up, doesn't it? So
Yeah.
I feel that, and I've felt that. It's a funny thing because it gnaws away. You don't sit, well, I don't, and I'm the biggest number geek that I know, and think, well, that 2% has changed my marginal effort by whatever. But it's the message, the constant messaging about it, saying, well, actually, why am I bothering to do that? Just so I can pay. I'm already racing to catch up for VAT on private school fees. I know, don't cry for me, Argentina. I get it, right? But why am I then going to put in more and more effort? I'm already putting in more effort to stay still. So why am I going to crack on to see it go up and up and up every year? You're not, are you? And I'm not a defeatist kind of person, just pragmatic like you.
More effort, less reward. You've said it there, Adam, about having to do more to stay even, to stay level, to maintain an income. The reality is that you have to do more now for less at the end of it. As a trader, I would buy last year, 2 years ago, regularly buy stock that, targeting stock to see a £5,000 to £8,000 profit margin. That's no longer financially viable or feasible.
No.
You now have to focus on 10 to 20 grand deals. After taxation, stamp duty, everything else, it's not worth the time and effort.
I think the thing is, Oliver, as well, a lot of people probably
still got risk, right? You've still got risk. None of what any of us here do is guaranteed as a return.
No.
Entrepreneurs, small business owners, things like that. You're doing more to essentially treading water, and then you still have the risk of getting a cramp and drowning, right? That hasn't changed. It's just become harder.
Oh, you remove the clearing service that you guys provide in the lower margin points, yeah? That's an economic loss to the entire market. The vendor's going to be worse. This is what people don't realize. The vendor will be worse off, right? It will be a much less efficient disposal. That property will stay void for longer. I could give you 100 reasons why that's a bad thing. And you're exactly right in what you're saying.
We keep the market moving. We keep people fluid. We keep social mobility. Comes from people being able to sell a house fast and move on.
You know as well as I do.
Money moving.
There's mental health implications. There's an absolute raft of stuff you could bring in here that would be completely valid. That people just don't realize about and don't think about. I mean, there's already so much disincentive to flip a property, double council tax. You know, not in the same way that you guys are moving them as quickly as you are, but flips have absolutely cratered. I've written about this over the last 12 months. Hampton's released the report showing the data. And now with the new stamp duty, or the new old stamp duty, if you like, you know, in a lot of bands, the Exchequer are taking more than 50% of the uplift from the purchase price to the sale price over the last 12 months. And that's just the stamp duty. What about all the other costs? What about the effort? What about the refurb? What about, you know, you're not buying it and taking money out of it before you make money. You might be able to, Oliver, because you're pretty clever like that. But, you know, unless there's a pretty amazing clearance to do or something, you know, there's all the other stuff that comes in there. And like Jay said, the risk, the time, the effort, the lower incentive to put more effort in, people miss out. People miss out. Exactly the same as me. I can't go in and buy what I could have bought before simply because of last year's change from 3% to 5%. Because the vendor's not taking 100% of that haircut, and my numbers don't work anymore on that basis. And the fact they can't control the interest rate properly and the bond yields properly, I mean, we're all paying more on any debt that we use than we otherwise would be, which again is highly inefficient for a market to be clearing, right?
This would be activity.
This is cheery. I was just going to say, this is so cheery. Better change the subject, Jake. Yeah. No, but it is the economic reality, isn't it? It is the economic reality.
Yeah, I think just to add to that point, as Oliver said, the reality is we've all got increased taxes, which we all knew as soon as we got a government that was basically Labour, they're socialists, etc. in general. So we knew that we're going to have increased taxes. I think ultimately now what businesses are starting to probably think about and do is how can we spend more, maybe, and be more efficient? So actually people are thinking about things and looking at things of, do we need to employ people? Do we need to try and obviously spend some money on maybe some plant machinery, R&D? So really, I think it's going to force companies to start to invest more money internally to either be more efficient or do more effectively. And even across the board in our business, we kind of looked at it and we thought, well, why don't we take on a bit more cost? Because actually taking on cost, yes, it reduces our bottom line ultimately, but actually it means that it frees us up to do other things. So maybe you can buy back more time. That's one option. So people can buy back a bit of time by employing people, even by being able to work in collaboration with other people, giving away some of their profit margin. And then it just means that maybe you can start to enjoy a bit of a better lifestyle because you're less hands-on, because ultimately you're paying less tax, but also at the same time you're doing less work to get a similar kind of income, in my opinion.
I mean, the economic argument, realistically, with unemployment going up and things like that as a general rule, is that you do force higher productivity out of fear because people suddenly realize their jobs are all at risk. That's short term, not long term, as a general rule, but you might find a little bit of productivity there, which is interesting. But people, because margins are squeezed, there's less money for investment in the real world. The more the tax pie takes out of the system, the less it has to leave for either the employee or the employer or both, right? So if the money isn't there, Jeremy had already done 100% super deduction, capital gains relief, corporation tax relief, and all the rest of it at the point of source. There was nowhere else to go on that front, ultimately. So the investment that's come in, and this is where investment gets difficult, because the investment that this government, the same as Cameron and Osborne used to court or have courted, is big business investment. What have they done in the property space? They want to do a JV between Lloyds and Barratt's. They just go after the very, very biggest players in the space to make a point, but also because they're the meaningful hundreds of millions, billions, etc., that get thrown into stuff. They don't care about the likes of us, unfortunately, but I don't know that there's necessarily an economic argument this will make things more efficient, it might do. We'll see it in the productivity figures. But while you're artificially pushing wages up as fast as we have done over the past few years, it becomes a binary choice. What do? You become more productive as an employer because you're more likely to look at the people who you need less, and you need them less because they're less productive. So you can get rid of them, right? That's an element of that argument that might have some merit. But largely speaking, the best moves forward in productivity, which is key, absolutely the number one key thing for the economy moving forward, is productivity. And that is when things are expanding at a decent rate, or dare I say, growth, gentlemen.
Haven't we got one of the lowest productivity rates in the world in the UK?
Well, we don't stack up particularly well compared to the Americans, but obviously we do all right compared to a lot of the Europeans, depending on what and how you measure it. There's been many, so German productivity is stronger. We're a bit better off than the French and the Italians. The last time I looked at the figures, which there may be some stereotypes forming in people's minds right now, which I'll try and avoid. But well, yeah, and but if they retire at 60 as well, does that make them less productive or more productive? Because you're losing people who are physically capable of still working, who've got the most experience in the workforce. Is that a good thing or not? Probably not, right? So we've got a slightly different dynamic playing out these days where, because minimum wage has been forced up under 25s so much, you've got this kind of like, would you rather employ a 50-year-old who's always kind of bumped around doing minimum wage or thereabouts jobs, or a 20-year-old you've got to train from scratch and got to try and keep them off their mobile phone every 2 minutes? I know where most people will be, and that's why you've got 1 million young people out of employment, education, and training, right? And that's very, very damaging economically, because that probably sounds stupid to say it, but at 20, if you're out of the workforce for an extended period of time, there's a chance you might spend the next 47 years out of the workforce, right? If you're 65 and you're out of work, it is what it is. And I'm sorry about that, but soon you'll be you'll be sucking at the teat of the state anyway.
I mean, interesting. Just while we're talking, got an email from someone saying landlord wants to sell due to renters' right, can't afford to basically keep it rented out anymore, doesn't want all the extra hassle legislation. Owner occupiers aren't interested because on the main road, blah, blah, blah. So we are starting to see a lot of that filter through into what is a sales market and what is a market that effectively we operate in, which maybe that landlord could be sat on the market for easy 6 to 12 months without even getting a sale on it. So I think that's interesting to see that that's also filtering through. One of my close friends, he was over on the weekend, and he's basically a vet for one of the biggest meat producers in the UK, and he does a lot of things with the government. Basically, one thing that he said is, and the biggest thing that's keeping the country being productive, is the standards that the country set. So there's obviously set standards when it comes to meat, poultry, how they obviously how they basically keep them within a certain amount of space. So you can only obviously have a certain amount of chickens within X amount of meters, etc. And he was telling me, if it wasn't for all these rigorous compliance checks that the governments have, we could be bringing in meat from America tomorrow, shipped via cargo plane, even including all the shipping costs, for less than half of what the UK British farmers will deliver it for. But it's because the UK have set standards, and they know agriculture is obviously the backbone of productivity for the UK. It's always been agriculture and poultry, etc. It's a big part of it. So food industry is a big part of the UK and the British economy. Now, the problem is, and yesterday I was also reading about Motability and how basically we have this Motability scheme, which is obviously helping people on PIP to get effectively new cars. People don't realise, but cars like Volvo and other big brands, they've all been sold off to the Chinese. So the Chinese indirectly are basically using UK brands or other European brands to make it disguised as they are European brands, and they're not. It's actually Chinese that own it. But Motability scheme, one of them that Rachel Reeves was targeting, is trying to say, actually by 2028, you want to increase it to, I think it's about 70% of the Motability cars we put on this scheme are produced in the UK or have some kind of production in the UK. So I think these are the kinds of things that can help increase productivity. These are the kinds of things that can help increase, obviously, the UK being better in terms of its GDP, in terms of its economy. But at the same time, I think a lot of it comes back down to what is the detail. So is a lot of this manufactured elsewhere and just assembled in the UK, in which case it's basically just scratching the surface. And also, how much more efficient and cost productive are China at producing things than we are? Because obviously the economy is moving towards a Primark, a Lidl, basically wanting what is effectively brands for a lot less. And in order to do that, you've got to increase production. And production means obviously trying to reduce your costs associated with that. So the long and short of what I was trying to explain is the UK is trying to set these standards because everyone believes in British manufacturing and production. But at the same time, I just don't know how long and how sustainable it's going to be. Just look at the steel industry and all the industries that have gone.
Yeah, yeah. I mean, we're very good at high value stuff. We're very good at high skill stuff. Cars are complex because it's always international, and that's why the whole tariffs thing has been such a big a big mess around apart from anything else, because I think the average car's got stuff from like 48 different countries in and things like that. I mean, original equipment manufacturers and supply chains are incredibly complex, down to individual washers coming from different parts of the world and all sorts of stuff like that. So that's a difficult one. Our manufacturing industry on the high skill front is not actually doing as badly as most people would have you believe. But you'll always, it's a bit like, they say, why don't we drill North Sea oil? Yeah, because we might as well. The argument these days goes, we might as well, because ultimately all we do is import it from somewhere else that's drilling it somewhere. So by not doing it, it's not a climate change argument. It's not this, it's not that. It's a nonsense. We're just outsourcing the problem to somewhere else. And that's what we do with all the stuff we buy from China, right? We outsource effectively slave labor or subsistence income labor to China. And it's acceptable to us. We turn a blind eye to it or whatever. Maybe there's some very principled people who might listen to this who say, well, actually, we don't do that. I don't buy stuff that's made in China. Makes your life incredibly difficult. And I don't know if you've got a smartphone. If that's the case, it will be quite difficult for you to have a smartphone apart from anything else. So it's complex. Whether that changes and how that gets undermined and whether we benefit. I mean, look, we've just had these tariff negotiations with the US, more recent negotiations where we knocked back the hormone-fed beef and we knocked back the chlorinated chicken one more time, and we held on to the 2% digital services tax, which I think is a good idea. We have a problem these days with the amount of money that the companies that service all of our daily lives and our needs and wants and luxuries, that money leaving the UK because it's ultimately owned by one of about 6 people, or at least 6 companies, and that's a problem, because if you flip that on its head, the local government in Preston did very well by saying, when we procure something, let's try and procure something from the local area. So we put the money back into the local ecosystem, and it's quite famous. It's called the Preston model. But it takes very principled and driven and talented people at the local authority level to try and drive a model like that. And it takes someone willing to say, well, we're not just going to go for the cheapest one every time, because this is the problem with public sector procurement. We just want it as cheap as possible. Well, do you? Because it's actually technology we're using to listen in on the Chinese, and it's from China, and that might be a problem, right? There might be an embassy problem there. Same goes for energy security. As a general rule, the amount of energy we have to import and don't control, we're lucky, in inverted commas, that a lot of the Middle East is not particularly political, not particularly hostile, and just create a business environment. So we can trade with them on the energy front. But we're so much worse off because we don't produce enough nuclear, or we don't produce enough. We've been crazy about things like that. And there's one thing I was hoping for from the budget today, really, to hear a bit more about nuclear energy, small modular nuclear reactors, stuff like that would be positive, because we're going to need this energy if we're going to even try and compete on the AI front.
Do you think that'll change now, Adam, the nuclear thing, with the joint venture deal with Rolls-Royce, and they've got this small modular reactor going ahead in Wilfer in North Wales now, haven't they?
Yeah, it's good
So
news.
it's a step forward, isn't it?
It is a good step forward. But I think what we're going to see is we'll see more and more private companies, especially because these private companies are so big. They've got the GDP of a decent sized nation these days. They'll just sort themselves out for power. Microsoft will be having small. It's not really going to come down to the government anymore. It's going to come down to these big companies who want to power these data centers. And, you know, it'd be another reason why it'd be an interesting situation because of the data laws in the EU. And whether any of that will change because they're funny about where the servers are that hold their data. And of course, these data centers are just much. I think there's about 6,000 been built in the US already, which when you think about it, that's a lot of buildings. That's a lot of real estate, right? That also consumes a hell of a lot of power. So, yeah, I think we will see more of it. I think we've been a little bit slow to the party, but at least we haven't been anti it, which we were in the 70s, 80s, you know, stupidly so many times over them. But we're not the only country in the world who's dropped the ball on that.
Do you think the UK is still seen as a safe haven compared to everywhere else from a real estate point of view, from a putting money in a bank point of view, and trying to get away from? Because, you know, we've seen that when Trump came in and had all the tariffs, and then everyone started to look from the US to the UK. All of a sudden, UK started to become a bit more attractive. But also, we've had all the conflicts and everything else that's happened in the Middle East and everything else, and that's made the UK a lot more attractive as well. So, do you think we're almost not growing, not doing much, but also still being seen as a safe haven, and that's maybe what keeps us kind of going for now?
Yeah, I think we've got a poor international reputation at the moment. And I think people probably don't look at, you know, we've made some stupid decisions, haven't we? We've hounded out non-DOMs. You know, I read one piece of research that said the average non-DOM was basically paying about 900 grand a year in VAT. Right? So we don't need to worry about any other taxes. If they're spending the thick end of 5 million quid a year on average, let them stay, right? Don't be so stupid and don't play the politics of envy. So I think we're gaining and garnering and nurturing, unfortunately, a reputation as a very high tax nation, right? Now, high net worth people are not bothered about public services as a general rule, regardless of them. They're always going to use private services, right? So, and I'm talking above your mansion, your 5 million mansion tax level and above, right? They're not even going to entertain going to a public hospital, going to a non-fee paying school. They're not even going to entertain it for a minute, right? So, what are our competitive advantages as a nation? Number one, knowledge transfer. The university system still going fine. I think I'm not au fait with all of the visa changes that have been made. I know that some visa changes need to be made, but generally speaking, the wealthy are sending their kids to the top tier sort of places that aren't probably going to be in any trouble. The land registry and the rule of law and stability and things like that, we have the best system in the world, even though it's still pretty rubbish, right, guys? Let's face it, when it comes to expediting titles and stuff like that. But we have the safest and best system in the world, which pertains to our legal system in general. And we're still pretty fair. You know, a lot of global commentary these days on the cheaper end right wing side of things is ultimately about us being too soft as a state, isn't it? But then in the recent sort of couple of weeks, you'd have to say Shabana Mahmood has gone some way to start talking about addressing that in a meaningful way. What will play out, who knows? What the backbenchers will do, who knows? I'm not really sure. But all of those competitive advantages still remain, don't they? Still remain. So it's only tax. But we've got to get this stupid notion of taxing people's worldwide assets or worldwide income out of our heads. And there was talk, and again, it's not made it into the speech, but there was talk that we were going to look at having a 2.5 million quid golden visa style arrangement, which would be a great idea because we do need to get these people back in. And ultimately, they're not bothered if dividend tax is 40% or 42%. They just pay. I don't know how many sort of ultra high nets you guys know, but I know a couple, and they pay so much tax. It's eye-watering the tax they pay, but they make so much money they don't care that much. They don't care. If they wanted to, they're super internationally mobile. They could move to Australia, they could move to Dubai, they could move to wherever they wanted to, but they want to be in the UK, and they'll pay the price of it. And of course, they've all got quite good advice structures, wealth protection wrappers, and all the rest of that. Of course they have. But what are you expecting to do? Just roll over and say, "Go on, Rachel, stick another skewer in the barbecue." Do you know what I mean? It's not going to happen, is it?
I think there's a lot more to the UK outside of the taxes, as you kind of like alluded to. Like the rule of law is pretty good in terms of like there's parts of the world you can go to where there's corruption on such a scale that it's normality. And actually, there's quite a lot of security in property, in equity in this country. that you just really don't get anywhere else. Even if you're in some countries where you've got compulsory purchase orders, the way that it's done in this country is probably one of the fairest ways it's done globally. And there is a long, long history of rights and freedoms and systems that you just don't find in most of the modern world. And I think it's still difficult to beat. And like you say, if you're at a level of wealth that you're discussing, Adam, then you're flotting away flies, right? You're just swatting away flies. It's not something that's really going to impact you. What the real concern is kind of like the little kind of catalytic converters in the marketplace, small SMEs, businesses that have 10 to 15 staff that build local reputations, service a local community, that are getting squeezed to death. That's really where the impact of these things kick in. And you can offset taxes on commercial premises for all of these different things. You can, the conversation around having apprentices and things like that are all positive, but the impact is still pretty bloody large, and there's nothing really there to offset it. So I still think we're heavily investable, whether you're looking at a Labour government sitting there or a Conservative government. The thing that made me laugh really, really hard is, everybody, we're looking for everybody to kind of pitch in and make a difference and to fix the problems. Well, we can fix the problems by having competent people running the country. And I can say that completely ubiquitously, of whether it's this party or that party, because what I find shockingly and still amazingly is every time there is a cabinet reshuffle, the prat that's been running transport is now running education, hasn't got a single clue about anything in transport, hasn't got the foggiest idea about anything in education. And it's just because they went to the same school, they have the same handshake, they wear the same underwear. It makes no difference. But it's us, the fools, who naively believe them or pick the lesser of the two evils, which is the reality of the situation 95% of the time, that is sitting here with our hands in ever decreasing pocket sizes, sitting here thinking, yeah, we'll keep contributing, but why don't you do something first? Try being competent. Try actually making a system that operates and works proficiently. Good luck. But you could say that UK or any country on the face of planet Earth.
Yeah, but it's a great source of disappointment and frustration for me that, they appointed James Timpson, for example, and I thought, good, this could be a good idea. Someone who really understands prisoners and prisons and has done a lot for social rehabilitation aside from anything else, and who runs a great business, right? What a guy, what a great guy. What have we heard from him since he was appointed? Nothing at all. So he's been told to shut up because there's no money. So it's a complete waste of time. Polly Gustafson, he used to run Dark Trace, massive business, right? I thought, great, someone in the Labour administration who's going to be able to talk to them about business in a sensible way. What have we heard from Polly? Nothing at all. Not a single thing. It's done completely the wrong way. You need to have, what I realise now, Michael Gove, right? Not a very popular guy, but an incredibly intelligent individual, yeah? What he did with the Building Safety Act and the Fire Safety Act and how it's completely stopped development of high-rise buildings is a complete disgrace. And why has he done that? Because he didn't understand. He thought he was smart enough to understand. He didn't understand. And he didn't consult with enough people who do know. I'm not just talking about property developers who are going to be self-interested, but I mean across the whole of the fence. We don't use the genuine, you see, expertise became a dirty word. But I'm not talking about people like me who pontificate about things on a daily basis. I'm talking about people with proven track records who are out there doing it, get enough people from either side of the fence and make some sensible decisions. I said, and I'm not even a developer, I said, look, fixing planning, that'll be great. But as soon as you realize you can't build it, you're going to have a problem. 15 months later, we then start hearing, oh, we've got a viability problem. No kidding. I literally knew that on day one, and I'm not the only one. There's nothing special about me. It was so obvious, but instead you've wasted those 15 months when you could have gone about solving that problem as well if you consulted with the right people. Now, this is just reason number 683,412 why I could never be involved in politics. It's too frustrating.
Well, on that beautiful note, I think we have held people's attention, hopefully for about 50 minutes. I hope you guys have got some value from us just nattering on. Obviously, from Adam, who has been investing for God knows how many years, 700 property portfolio, brain of Britain, that kind of stuff. Saif and Adam, who are property traders, and as Adam said, traders provide an essential service to the property industry, creating fluidity, getting the bottom market moving, clearing the empty houses kind of things, putting properties back into use. Myself, who also pontificates like a lunatic day to day. And hopefully you got some value from that. If you have, don't forget to like and subscribe and leave us a comment with disagreeing with us. Why not? Give it a go. Or agreeing with us. We always like that. Everybody does. But thank you for joining us today.